Hi everyone, I'm James Spinelli, founder and CEO of Great Valley Advisor Group. GVA is a leading technology-driven, full-service, registered investment advisor. GVA partners with select independent financial advisors to provide customized technology, investment strategies, compliance, and back-office solutions. This podcast will provide answers to common questions that are asked by advisors throughout the transition process by interviewing experienced individuals who have benefited from their transition to independence. Welcome to the GVA Way. Hi, I'm James Spinelli, founder and CEO of Great Valley Advisor Group. And here today we're at episode number 26 of the GVA Way with Paul Tourville and Peter Tourville. We're both founders and partners of Next Level Planning and Wealth Management. Thanks for being here today.
Thank you. Welcome. Thank you.
Today's conversation is going to talk about advisor growth, innovation, and the infrastructure and platform that Next Level has built over the years of being partnered with GVA, as well as financial wellness done right and how they've incorporated that into their practice, and something that we have coming for the second half of the year here with GVA itself. So Paul, why don't you give a little bit of a background on yourself, and then Peter will hand it over to you, and just talk about how you got in the business, the firm, and getting started.
Yeah, so I got in the business on the insurance side of the house, right? So I started in the traditional insurance model. Here's how many phone calls you have to make. Here's an apple, here's a roadmap, good luck, son. And essentially that's how I got in the business. And so did that separately from Peter in different parts of the country for about 8 years. And then after 8 years of calling each other every single day and talking back and forth, the concept of Next Level was born, and we finally teamed up and built this thing that we have going forward today. So I started on the insurance side of the house.
Insurance, all right, very good.
I was on the wire side. I was lived in Southern California, Northern California, working for a major wirehouse, doing research reports and smiling and dialing from 6 in the morning until 8 o'clock at night, depending on where you're in the world. Sorry. Made lots of phone calls, had some success there. But I think that's important to kind of little tidbit background too, is that we grew up on a dairy farm, so it's not like we grew up with a natural client list to be reaching out to. So it was definitely smiling and dialing, and good luck to you.
Yeah, absolutely. And obviously all that led to creating a pretty diverse background for the both of you, which then you formed Next Level Planning and Wealth Management, which is an absolute machine and has done great things. It is a great firm. It's a great place to be. Why Next Level Planning and Wealth Management? Why the name? Why the concept? What really sparked that?
Yeah, I'll give the specific name conversation to Peter, but
okay.
Next Level essentially was built off of trying to help lots of people at lots of levels and not have our names be up front, right? Yeah. So we wanted to create a firm that would be multi-generational in nature, and so what we're doing would carry through generations of people, and our firm would carry through generations of advisors. We knew that it would not be important to have our name on the front of the door per se. So it was designed as a holistic firm. Like I said, I came from the insurance side of the house, Peter came from the wirehouse side of the house. We're kind of in that corporate model, and we kind of quickly realized that if we're going to have a relationship with clients that we want to have with clients, it needs to be holistic in nature. And so when you're holistic in nature, you're not driving down towards an insurance rabbit hole or towards just a money rabbit hole. You're having tax conversations with CPAs, you're having legal conversations with attorneys with the client. So you're truly doing holistic planning. And that's why Next Level Planning Wealth Management essentially was creating, is to be more of a holistic tool for clientele to deal with at all levels. Because there's 5% of America that can pick up the phone anytime they want, and they can get a financial advisor on the phone anytime they want, right? But 95% virtually have no access.
Yep.
And so our model was built to serve all, not just that upper 5%. Because again, as Peter mentioned before, we're born and raised in a dairy farm. When I started in the business, my project 200 was 37 people, primarily college profs because they went to school in the area and ex-girlfriends. Yep. That was about it. So it was basically started from scratch. And so it became important very quickly to realize that it's not about widgets, it's about a holistic relationship.
Sure.
Yeah. It was developed kind of conceptually when I was at the warehouse, where we were working with some people that moved a lot and did different things, and there was no concierge that really kind of tied everything together. So if you move from Detroit to Southern California, who's going to buy a car, who's going to find a place to live, all that kind of stuff, and that's kind of how that financial concierge mentality, and it has evolved over the years, where it got a little more specific as to what exactly we do. But as I always say, next level means we're helping you get to the next phase of life, and the elevator doesn't always go up. Sometimes there's setbacks, sometimes the things that happen. So there has to be somebody that walks you through that, and they don't just abandon you because you lost your job or because you lost the $50 million that you had. And I've had clients that have lost $30, $40 million because they believed in the stock, they believed in the CEO, and went the wrong direction on it. And they got tied up in a trade that they couldn't get out of because of blackout periods and stuff. And at the end of the day is that they're still with us.
Yep. And it's those conversations that are going to be so important that you have with the clients as well, right? And that's the holistic planning and making sure that they're prepared for the inevitable should it happen, right? I think that's a good piece there. So let's shift gears a little bit. I'm surprised you actually didn't say Detroit to Philadelphia, considering we're sitting at the Union League in Philadelphia. You go Southern California, which is, I guess a little bit nicer than the weather we have outside today here. But let's kind of shift gears and say, as you were building the business, right? As for a business owner or for someone in the space, it takes a lot, right? From a GVA perspective, if we were building GVA, there's ups and downs, right? So you were going to face those as a business owner. There's no doubt about it. But as you were building it, what was some of the systems or items you looked at early on with Next Level to say we have to have this right out of the gates? And then as you started to have significant growth over those years, what were some of the things that you kind of reevaluated and said, all right, now here's phase 2 or here's phase 3? Just conceptually for those listening that might be saying, I want to become the next level, right? Or what's it going to take, right? Because that's a lot of conversations that as an RIA we do have with firms, and I think it'd be great to hear from Next Level considering you've done it, right?
Well, what's your differentiator? At the end of the day, what do you have that no one else has? And that's you, right? I mean, there's only one stock market.
Yeah.
There's lots of companies that sell insurance products.
Yeah.
All right. So at the end of the day, what is your differentiator? Your differentiator has to be your service model, right? So when you look at your service model, whether that's client acquisition, whether that's maintenance of clients, or whether that's transition of clients, what is your model? What are you doing? Most of that is replicatable, right? You're doing the same thing. People love to say, I'm going to chop my clients up A, B, C, D, whatever, and somehow I'm going to service D's less than A's. That's ridiculous.
Yeah.
It's a ridiculous concept. Find junior partners. Find other people that can make you more efficient. So C and D clients can go to a junior partner or somebody else in your firm, a generation 2 person. Don't say, well, they don't get as many phone calls, they don't get as much touch because they're a D versus an A. That's just a ridiculous, broken, old school model. Yeah. So everything we do that is replicatable from day one, we have a process. We have a service process. We have a client acquisition process. A new client gets a kit, and they get an introduction to how to access all their accounts online. I mean, that is outreach directly from our infrastructure team to them. We have a client service model, whether that's newsletters that we do monthly, whether that's town halls we do quarterly, whether that's quarterly phone calls from our operations team, and mandatory face-to-face one-on-one with their rep. Yep. That's 21 contacts per year directly to them, not leaving a voicemail, not just dropping something out there 21 times a year that they're still being touched. And I don't care if they're an A, a B, a C, or a D. They're getting touched 21 times.
They're a client of the firm.
Which is why,
exactly.
When you look at retention, our retention is absolutely ridiculous. It's probably one of the biggest models to our growth. I always joke all the time, if my responsibility is the front door, right, his responsibility is the back door, we just don't tell people where the back door is.
Yep.
We've had entire quarters where we haven't lost one client, even in a firm of our size, which is getting to be kind of chunky.
Yeah.
We don't lose one client in an entire quarter. That's amazing.
So one of the things that I think would be helpful probably for the audience as well is, you said a firm of your size. So can you give a little overview, we're just going to switch gears before I go to you, Peter, of how many advisors for that service model? It's not just the two of you, right? What is, just give us a quick overview.
Right. The risk of sharing numbers is they get dated in a hurry. But I mean, at the end of the day, as we sit here today, our firm is responsible for about $3.1 billion. Internally, we run about 1.2 of that internally, an individual.
Yep.
We've got 31 people that call Next Level their home, kind of evenly split between operations people as well as production people. The entity itself, we're a lot bigger than what we were when we started this journey with Great Valley. I think it's about a 7x multiple. The last time I did this in a few short years, right, which is great. And even with all that, right now as I sit in front of you for the calendar year 2026, we're up another 50% this year alone, which is just kind of shocking when you start to talk about the numbers. So right now today, we'll probably do about 17, 18 million dollars of revenue. We push around 3.1 billion or so, about 1.2 of that for individuals in individual advisory assets.
Wow. That's impressive.
I think largely that's largely due to the fact that we are truly a team. We're willing to give up. We have people that are passionate about what they do what they do, and they don't really cross the streams, if you will. They don't move into the I enjoy the operational side of things. I enjoy communicating with the clients. Although some of the operations, day-to-day stuff, we just kind of let the operations team run through that. Operations team, we've totally empowered them to make decisions. I always tell people, you can screw up around here. It's okay, because at the end of the day is we can fix it. Yeah. Now, if you do it once or twice or three times, we're going to have a serious conversation. But that being said, there's a reason we need to become surgeons. No one's going to die on the table because we slipped. So it's okay to make a mistake here and there, that type of thing. So I think the biggest thing for me is really empowering the staff, which I think was a decision very early on, just to hire good quality people with similar work ethic, similar moral compass, if you will, and allow them to go through life and make mistakes and grow.
Yep. And I mean, based on our experience of working together and the team members, it's been great, right? And I think the staff is fantastic, and the systems that you've put in place and the processes have been top notch. So as we look at what drives that growth, right? We'll switch gears a little bit here. We've talked about great client experience, making sure everything's systematized, making sure that everything is set up properly. What is ultimately driving that growth? And I think one of the big engines that you have is financial wellness done right, as also known as FinWell, right? And so why don't you give the viewers a little overview of financial wellness done right, what exactly it does, and how it can help employers, employees, and then obviously with the advisors that you're bringing on, help them grow as well, I think would be helpful.
Right. So wellness has been around for a couple decades now, and everybody started talking about wellness, about smoking cessation and weight loss.
Yeah.
And then started to realize that, well, people kind of care about their money too.
Yeah.
And they're kind of at a bigger percentage of people care about their money than they do about weight loss or about smoking cessation, right? So we kind of dove into this whole concept of financial wellness, right? Now, it's obviously morphed over the years, so my commercial is not, you should do some kind of wellness on the financial side. Now it's, you should do it the right way, right? So when we talk about financial wellness done right, it's three pieces, right? Number one, it has to be holistic in nature. So we have to stop trying to teach people about the widgets. Coming in and talking about large company value, large company growth, nobody cares. Mm-hmm. They care about, how do I get what I want out of life? How do I able to retire at this time because I work for you, right? How can I educate my kids because I work for you? How can I pay off my bills because I work for you? How can I buy the new truck because I work for you, right? So it has to be holistic in nature. It can't be product specific. And one thing where financial wellness came from that clearly is now way behind is widget education. Bring the health insurance person in to talk about the health insurance. Really? Yeah. Bring in the 401k person, talk about the 401k. Yeah, we do financial wellness. We have our 401k person come in. What are they teaching people? Well, they're talking about the markets. That doesn't help anybody. Yeah. It doesn't move anything forward, right? So it has to be holistic in nature. It has to be generationally specific. Generations learn and listen and function differently. The 20, 30s, and 40-year-olds learn and listen differently for different time spans, sure, at a different rate and different media than a 50-plus-year-old. So we have our platform, Financial Wellness Done Right, but underneath that umbrella, you've got to Help You Thrive, which is designed for that 20, 30, and 40-year-old crowd, or You Thrive.
Still growing, still building.
Still growing. It's, love and money for couples. It's identity theft protection. It's buying versus leasing a car. It's buying your first home. It's smart decisions in your 20s, 30s, and 40s. It's conversations like that versus the Retire You platform is built for the 50-plussers, right? So now you're talking about retirement health care, Social Security, retirement income planning, investing for retirement, right? Those types of topics. So it has to be generationally driven. You can't just say, well, one size fits all, because it just doesn't, yep, right? And if I logo stuff with the Retire You logo, no 20, 30, 40-year-old's going to come, yeah, because retirement, that's a long way. Well, I'm talking about identity theft protection. Well, Retire You, I'm too far away. Yep. So it has to be generationally specific. And then most importantly, and this is a huge differentiator for us, is it has to be motivational, not educational. Lots of people have gone to lots of meetings and said, man, this was great. I learned so much. It was fantastic. And they walked out with their folder, their book, and they put it on the shelf, and they never touched it again, right? Yeah. What impact did you truly have? Yeah, he provided great education. He was a great speaker. But what did you do about it? Question 6 on our evaluation form, which is now primarily all virtual, right? Yeah, Survey Monkey, right? But question 6 is, do you plan to take action regarding your own personal financial situation because of being at this session today? Yes or no?
Basic question.
Yes or no? 94% of well north of 100,000 people that have gone through our financial wellness done right have said, yes, I plan to take action. And then we come back and say, when? 0 to 3 months, 3 to 6, and the overwhelming majority, now, 0 to 3 months.
Yeah.
Right? So from a company perspective, you spend a lot of money on benefits, right? Spend a lot of money on benefits.
ton of money.
What value prop are you getting out of them, right?
Yeah.
Because as we move forward with AI and things like that, I see companies now that say, here's your book, have your answers back in a week, right? That might be driven to even a virtual model, right? So what kind of connection does the benefits platform have other than just spending a lot of money? And every year, unfortunately, those prices seem to increase. So it's difficult to have a win as an HR professional. It just is, because you're always delivering the bad news in the best way possible, right? So financial wellness done right is an opportunity to bring a program in that we don't charge an employer for, right? They can bring that program in. We can take the existing benefits package and wrap it into the education. And I can teach that employee that the fact they work for you and they get this 401k match or this profit sharing contribution, or the fact that they even have a 401k that they can contribute to, because we as Americans are pretty good at saving out of the paycheck. We're not so good at saving out of our checking account, right? So even just having a 401k, even though there's not a match involved, is a huge win, for your people, right? So it's got to be a win for the employer. The win for the employer is a huge value prop, a huge value add to the existing benefits plan without adding a penny of cost, right? Obviously, it's a win for the employees as well, right? Or I should say association member. Maybe it's not an employer group, maybe it's an association group, right? So that member, what are they getting? Well, they're getting that education, they're getting that knowledge. Again, go back to the conversation. 5% of America, no access. Oh, excuse me, 5% of America, tons of access. 95%, no access. So we're providing education, whether it's virtually or face-to-face. They're walking out saying, I learned some stuff, I can take action today. I can help myself protect myself from identity theft today. I can help myself to buy that house today, right? With what I learned in the last 25 minutes or 45 minutes of conversation. So win for the employer, added value prop of the existing benefits package they're already providing. Win for the employee in the fact that they're getting education that they really have no access to get on their own.
Sure.
And obviously the win for us is access to people. You know, if you're in this business and you have a culture match with the firm, I really can't think of anything better. I have one benefits package to memorize. I can be a value add to all those employees. They're approaching me on a favorable basis. I don't know if there's a better lead source to have in our business, per se. And it feeds the whole beast.
It's like the ultimate COI, right? I mean, you're creating these leads directly into the organization.
Absolutely, and that's what feeds the machine. We really only have, of the entire firm, we really only have 4 reps that don't get 100% of their introductions to people through financial wellness done right. This whole next level thing is largely driven, 90+% driven by financial wellness done right.
We'll get a lot. I mean, we'll get a lot of referrals from the insurance brokers and that type of stuff, because it's the race to zero when it comes to fees, right? Whether it's 401k or health insurance, whatever, it's race to zero. So how do you justify your fee? Well, you wrap this program in, which we don't charge anything for. We come in, we educate them across the platform of everything they have in house, right? It is a free benefit, quotes, right? Because they're giving up their time, because we do everything during the workday. We're not working nights. We're not doing the chicken dinner seminars, all that kind of stuff. The cost is relatively low for what we're doing, right? But at the end of the day, is from the employer standpoint, they love it, because HR is not equipped to do what they used to do and go through the whole thing. The brokers love it, because the brokers are like, I can charge that premium fee or charge that fee that's kind of in line, but maybe a little bit higher than the rest of them, and still get the business because I'm offering this thing. And then once they're in, they don't leave. We've had people say,
why would you? I mean, if you think about it, why would you? Right? Even if it's educating you in that.
Yeah, we've had people ask us, what if we leave, can we still get the education? And at the end of the day, what it comes down to is that, can we get the education? If we're not providing the 401k plan, we'll keep coming through the front door. And we don't do the 401k in most of the ones we work with. But if you did 401k plans and wanted to justify your fee, what a better way to justify your fee?
I think it's helpful for our audience to understand the operational benefits, the infrastructure, and really that growth engine and how it can help employers, employees. But as we look to advisors within the GVA ecosystem, or we look to advisors that maybe are saying, I want to become part of what they have built and use FinWell and have access to this, what does that mean? How can they get started? And really, what does it look like?
Yeah, so what does it mean? It means a commitment to how you're going to run your business. This is not a bolt-on. This is not some subscription you just buy and say, well, I'm going to give it a try and see how it works. It's pretty simple. Do you have an employer group in your area where you live that you like the people, that the culture is a good match for you, that you say, you know what, not only do they make money, but I kind of like talking to people like that. I mean, first off, if you don't like talking to engineers, don't refer us to an engineering firm, right?
Yeah.
If you like teachers, let's talk to teachers, right? So the first thing is to identify those groups in your area that are a natural fit for you and your culture and your team's culture, right? So how does that look? Identify who that is. We'll reach out on your behalf with you jointly, whatever the case would be, virtual conversation. Have that conversation with an HR person, might be a couple levels down from the decision maker. We'll lead all those conversations. We'll lead all those conversations with the HR person and get them to the point where they understand how financial wellness done right truly works, right? Part of that conversation is going to be requesting employee benefits information. Part of it's going to be adapting a curriculum for the course of the year. We like to do these every 3 months. So we'll identify what the first topic's going to be. Are we going to split it between Retire You, which is the 50-plussers, and You Thrive, which is the 20, 30s, and 40-year-olds? Are we going to split it? How are we going to deliver the curriculum? So typically that's done, like I said, on a quarterly basis. Most of these are going to be virtual presentations. So we'll facilitate the presentations.
Yep.
Next level will facilitate the presentations. We'll lead those. We'll do everything. At the end of it, they're going to fill out the SurveyMonkey link or some kind of a virtual link, evaluation forms. Those evaluation forms are going to come in. Now, I tell you, I mean, one of the script things to prepare for this was, when did you realize this thing was scalable? Our first relationship, blue collar, manufacturing facility. They make caps to put on ketchup bottles. You know, when you put your ketchup the right way so it's upside down so you don't get the water first. That's what the business does, right? 400 employees. They made it mandatory. This is the first financial wellness relationship we ever did. 400 people attended the sessions. 162 said, I want to meet. I want to talk to you individually.
Wow.
So you talk about scalable and like, this is literally the dog that caught the tire. It's Peter, myself, and one staff person at the time. And we made a commitment to all of them. We call them in 48 hours.
And so, one thing to think about here, right, is for the advisors that are within the GVA network already. So if they raise their hand and say, I want to work with Peter and Paul and the Financial Wellness Done Right team, I still want to use my brand, right? Yeah. I still want to be Spinelli Wealth Management, or I still want to be, you know, the DBA name that I have out there, because that's what the employer knows me as, or that's what the, you know, the CEO that I'm working with may know me as. That's okay to do, right? I mean,
100%. We don't want it branded next level. We want it
Okay.
branded as a local, brand, right? So we're just hired talent,
Yeah.
and that's why the branding is Financial Wellness Done Right, or FinWell. That's the branding. We're not using next level branding.
Yep.
It's not Paul Tourville of Next Level. It's Paul Tourville of FinWell, or Paul Tourville of Financial Wellness Done Right. Because at the end of the day, we're going to get those evaluation forms in. And we're going to give them right back to you,
Yep.
right? Because it's your job to call all those people in 48 hours, by the way. It's your job to walk them through the process. Now, we'll teach you the correct process. We think that everybody deserves a deliverable, whatever financial planning software that is. We think everybody should have something in their hands that says, I benefited because I met with this person, regardless of their socioeconomic status, right? But at the end of the day, I'm not interested in meeting with the people, right? I'm not interested in coming to your town. I'm not interested in putting up next little offices everywhere. No. This is about the front end, create the leads, and go forth. Now, as a reminder, you know, if you're in person, our traditional rate response is about 60%. If you're in person, about 60% of the people that are in that room, the people that have voluntarily chosen to attend the session, that at the end, fill out the evaluation form and voluntarily said, I want to talk to a financial advisor, a local financial advisor. Face-to-face, about 60% are going to say, yes, I want to meet with a financial advisor.
Sure.
Virtual, that number has increased steadily post-COVID. That number now is over 10%. So if we do a virtual presentation and you have 100 people or 200 people, or some of our relationships, we have 1,500 people online, about 10% of those are going to say, I want to talk to a financial advisor. And we do a lot of that work virtually. Now, again, we're not interested in taking that next step as far as clientele in your area. So it's all branded by whatever your local DBA
So you can
is.
white label those. You could use it as long as you have the financial wellness element. That's something that you'll do. And then from a standpoint of the presentations and the speakers, that's members of the Financial Wellness Done Right team that would handle that.
We'll get it sold. We'll create the deliverable. We'll deliver the content. From there, your responsibility is clientele.
I mean, as it expands, if you have an advisor that has a talent for speaking, enjoys speaking, wants to do the speaking, that type of stuff, we'll take them through the training process and we'll get them educated to the level that they want to, that we need them to be at to do the presentations. But to me, it's critical because, if the minute you step over that line of an educational session and you turn it into a sales seminar, you've not only lost the room, you've probably lost the company, and you've probably lost the brand in the area. Exactly. Because all the HR professionals talk to each other, the community there is very small, and you can upset the smallest person in the totem pole. It doesn't really matter because at the end of the day is if you upset them, you're out of that business forever. So when we say financial wellness done right, it's because we've done this since 2000. And when we started doing it, we watched other firms that we worked with build it out, take their top producers, throw them into this thing, and it became a sales seminar. And they just lost companies left and right. Financial wellness done right is you're sitting there willing to give a holistic conversation with somebody in a informational technique that allows them to make a decision and then motivate them to make that decision. Not just say, yeah, I really should lease that car rather than buy it, and walk out and go buy it anyway. So at the end of the day is that you have to motivate them, so.
And I think that's a big piece. And one of the other elements that you're talking about is how we get that feedback back, right? If somebody attends the event and says, hey, I do want to talk to an advisor. And I know that is something that members of the GVA team are building within the Salesforce environment that we have to help facilitate the steady flow and create cases similar to how the next level team has built it out there.
Because there is a wave, right? There is a wave. I mean,
100%.
the first couple times you're at a company or an employer group or an association, you're going to get a group of people like, oh my God, this is fantastic, it's brand new, I'm in, right? Yep. And then if you call it a sophomore slump or whatever, I wouldn't really call it a slump, but you get to that next tier, it's about them going back to their desk or their office or their cubicle or their workstation and say, the next time those guys come and the next time they offer that virtually, I would listen to that. That's when you get to that next generation of people, essentially. Correct. And that was really, we call that wave that kind of comes behind it, because you've got people that, I've listened to your sessions for 3 years now, and I think it's time. Yeah. Or I've listened to your sessions a few times now, and now I'm getting ready to retire, right? So that growth number will just get bigger and bigger and bigger as the relationship grows. We've had relationships we've had in place for 25 plus years. I mean, the original clients, we still have them all. All the companies, we still have them all. We still do financial wellness done right at all of them, right? There is a big wave there. There really isn't anybody else they call when it comes to financial decisions. If you work for that company, it's like, well, everybody that's a retiree worked with these guys, and they all retired, and they're all still retired. None of them had to go back to work. I would call those guys, right? So that wave does exist.
And I think with where, Next Level has gotten to over the years, you actually have proof that this is working, right? You can show numbers, you can provide metrics, you can give real life examples to the advisors who are interested in the platform itself. And so as we enter into Q3, I think we're really, really excited as an organization to have access to financial wellness done right, especially already within the RIA itself. So, we're grateful from our side. We're obviously grateful for the partnership as well.
Yeah, it's been great.
It's been really, really good. Is there any other items around financial wellness done right that maybe you want to touch on before we kind of round this thing out? I think we hit on. I think we hit a lot of
I think we hit it pretty well. I mean, the end of the day is that my only takeaway from it is that you have to be willing to sit there and give the information and understand that person may walk down the street. The message we give to the advisors, we give to the HR professionals all the time is when they leave, they get a deliverable. At the end of the day, they can take that deliverable and go with somebody they work with, or they can come back to us, or they can just choose to put it on the shelf, but they're going to get a deliverable. And we've had a percentage of people that go down the street and go to their current advisor, so on and so forth. But I think what's unique about it is, to Paul's point, is we've had people that we've dealt with for 20 plus years. They had their advisor they walked down the street and did the work with. They continue to come to the sessions maybe once a year or once every 2 years. And when they get ready to walk out the door, they call us and say, hey, you know what? You guys have always kind of been there. You've been consistent. We still send them, we don't solicit them, but we still send them the quarterly newsletter, the monthly newsletters. We still send them all the stuff. We let them log into our things. So at the end of the day is that they're still getting touched by us. Yeah. And when they look at it comparable to what their advisor have done historically, we're always in front page, right? Because the biggest thing that advisors do, and that I think, you in one of the notes I looked there, it says, what are one of the biggest mistakes you've made? I don't think anything's a mistake unless you don't learn from it. Mm-hmm. And I think the biggest thing that I would tell people going forward is that when the market hits the fan, the wrong direction, Most advisors hide. They hide because they don't have anything to talk to, because all they've been talking to all these years about is marks, how well it's done, how my stocks have done, how my whatever's done. If you've done the holistic plan, you've walked through the whole procedures, you've done all the things that this is what the averages are, you pick up the phone and you start calling. And our retention rate is astronomical through negative markets. And that's just because of the fact that, I think anyway, just because of the fact that we're the only ones talking.
Good communication.
It's the old adage, and the absence of true leadership, the loudest person wins.
Yeah.
And you know what? I'm going to be the loudest person when the market's going the wrong direction.
Absolutely, and I think that's a good thing to end on there with some guidance for the advisors itself. But let's finally get to what Paul and Peter do outside of the office. What is it? So Paul, we'll start with you.
My life is about kids. My wife and I got involved in foster care about a dozen years ago.
Yep.
So I got married late in life, so I picked up 2 biological sons with that who are now 30. He's married and expecting our first grandchild coming up this September, which is kind of exciting.
Congratulations.
Thank you.
Yep.
And a 22-year-old that lives next door with his girlfriend, hopefully fiance sometime relatively soon. And then from there, you kind of go down the list of foster kids, right? So my house goes 4 all the way to that 30-year-old that I just mentioned. So I've got a 4-year-old and a 5-year-old that have been with us for 2 years, Ezzy and Leyland, fantastic brother and sister. And then I've got 3 boys that came to us at 8, 10, and 11, were with us for 3 years. They went home, and now they've come back. But now they're 17, 20, and 21. So I go 4, 5, 17, 20, 21, 22, and 30. And then just in the middle of the mix is Harper Grace, who we had for 3 years. That's with her dad, but we still get to see her every Tuesday and every other weekend, and she's 7. So 4, 5, 7, 17, 21, 22, and 30.
That is
So
impressive.
that's about it.
I mean, you got your hands full, right? So you got a full house.
I have an amazing wife.
I was going to say, yeah, your wife.
That's what I have. I have an
Truly
amazing
amazing. Yeah, absolutely. How about yourself, Peter?
I'm more in the, I don't have kids. He's the good son. I'm the I'm the guy that to me it's about police and firefighters and veterans and I guess dogs, if you will, canine units, that type of stuff. We donate a lot of fire suppression tools, a lot of AEDs, just public school systems and that type of stuff. Just trying to really help out in that manner. And then the vets work quite a bit with the veterans organizations and some other things like that. Just trying to help my wife and I had centers around the dog commitment, more to help the canine units. Everything is voluntary. Everything, all its fundraisers. There's no public support for it. There's no taxpayer, but money goes to most canine units. So they have to get that money from the public, and that's kind of where we stepped in and that type of stuff. So
that is fantastic. I mean, those backgrounds are super impressive, and I'm grateful to have you guys here in Philadelphia today. I'm grateful to have you as part of the GVA network, as partners of the firm. So it's been a fantastic partnership. I look forward to the rest of the day here with you, and thanks again for being on the show.
Thank you. Thank you.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.